He paid his mortgage with his investment gains. I tell you, my friends, this is huge. I was talking to a client the other day from California. He's done so well in the market over the last 10 years. He just said, I'm selling my gains, paying the long-term capital gain tax, huh? And he's paying off his mortgage, frees up his mortgage. Interesting. And he now doesn't need to generate a certain amount of money to live on. And that means he doesn't need to pay ordinary income tax on a certain amount of money to live on. And now he's going to retirement, quitting his crappy old job because he's probably got 15 years ahead because that's it, man. His wife's 10 years younger. He's twice a cancer survivor. And he's, type 1 or 2? These are the two worst diabetes, but type 1, I think, I can't remember. Type 2, whatever it is. But, he knows. He's like, look, I don't have a huge amount of time left. I want to enjoy it now. And not having a mortgage means that's money I can use for other things or just not use at all, whatever I decide. Anyway, so let's check this out. So I want to show you something here. So just go to dinkytown.net, fixed rate mortgage calculator. I'm just giving you an example here. All right, so we got a guy with a $400,000 mortgage, 30 years, 4% is the interest rate. 1909 is what it takes to pay that principal and interest, not property tax and homeowners insurance, just principal and interest. All right, so basically you got to generate roughly $24,000 a year in income in which to come up with that money to pay the mortgage. And for just simplicity and a 20% effective tax rate because you're working, that means $24,000 a year is going to cost you $4,800 a year in taxes, and that doesn't include FICA. So for you to work to pay the mortgage, it's going to cost you basically $30,000 a year, in which to pay $24,000 a year in a mortgage. Hope that makes sense. This is what the value of imputed income. This guy lives in California. He was working because he had to pay his mortgage. Now his mortgage is paid, which means he does not need to generate that income from labor in order to pay the mortgage because it's paid off. So no longer does he need to work, pay FICA taxes, state of California taxes, or federal taxes. All he had to do was sell his assets at 15% long-term capital gain. I hope that makes sense. A significant benefit. All right. So now we're going to say he took $400,000 out, and now we're going to go down to 10 years. 10 years later, he had a loan. We're going down 120 months, and he was still worth right there $315,000. So he sold, I don't know, let's say $400,000, right? Minus 15%. Would that be about it? Yeah, right there. 400,000. No, it's less than 400,000. 375,000 minus 15%. Yeah, right there. 375,000. That's assuming there's no capital base, no cost basis, which of course there is. But he sold his gains. It probably cost him $25,000, $50,000 in order to pay off that mortgage, which means he's going to save to have to generate $24,000 a year of income, which costs him about $30,000 a year because of FICA, state and income, local taxes. On top of that, he's saving $1,000. This is interest right here. He's saving, hell, man, he's saving, I don't have a spreadsheet on this, but look at all that interest he saved. So go to 120 because it's 10 years. He basically has mortgage for 10 years. $1,000 a month in interest right there for the first, there's 1,000 all the way down to, look at this. There's until right there. So the next 20 years is going to cost him $20,000 of interest plus all the taxes he had to generate in which to generate the income to pay that debt. Or he could just sell his gains, pay the stupid long-term capital gain, and move on, which is exactly what he did. And he did that before I talked to him. I said, I salute you, sir. Now, he still has other money. Don't get me wrong. You don't want to do that if that's your last penny. And he certainly, well, I don't want to say certainly don't, because I did. I'd sold 50, I think I had a $60,000, of which I had a pretty significant gain, $30,000 long-term capital gain, to pay down $60,000 on my mortgage. And I didn't pay the whole thing, and it did leave me with not as much liquidity as I'd like, but in hindsight, I've been able to build back that liquidity, which is nice. By labor, FICA, income tax I have to pay to the state of Georgia, the federal government as well. But at the end of the day, I have $60,000 less on my mortgage. That's a challenge. If you don't have enough to actually pay off your mortgage, it's a little bit of a different story. But in this case, slam dunk. You got gains, you better be looking at taking some because the markets are suspect. No other way around that. All right, we'll see you guys.